Evening, just going to talk today about using home loan to buy cars, personal loans, all that sort of thing. How you can use it without you get the mortgage rate without using a 30-year term. So a lot of people will, buy a car, for argument's sake, the car will cost $50,000. They go, you're right, the repayment's really good. You're getting a rate of under 4% on your mortgage as opposed to a rate of 8, 9, 10% on a personal loan. The issue is when you use your mortgage, a lot of the times you'll add that $50,000, you'll pay it back over 30 years. I just want to discuss today how you can avoid doing it over 30 years. A lot of lenders will allow you to add what's called multiple splits on your home loan. So a lot of people have heard, fixing one portion of your home loan and having the other variable. Same sort of thing. So I would say you've got a home loan of $450,000, you're going to add a $50,000 loan to it, so you have the two loans separate. That $50,000 loan, instead of putting it on a 30-year term, you can just add that $50,000 over 5 years. That way you get to grab the rate of under 4%, generally about 3.6, 3.7%. It's pretty good at the moment, and buy a car on that, and that loan secured by the house. Look, by doing that, you save on $50,000 by doing it over 5 years on the home loan as opposed to over 30. Over 30 years, the interest bill is about $33,000. Over 5 years, that interest bill comes down to under $5,000. The catch is repayments jump up a lot. Repayments go from something like $230 a month to $916, I think it was. So this is about a $700 a month jump in repayments, but you're saving $28,000 on interest, which is pretty humongous. So that's just something to think about. When you're adding all this stuff to a home loan, is you're getting a great rate, but you are paying it off over a long time. Other thing you can do, that smaller portion, that $50,000 portion, you could fix it. If you really wanted, a good rate, again, 3.7, you fix it for 5 years, you're guaranteed it's not going to move. Other thing you could also do, you can put it over 10 years. So still not as good as 5 years, but if the repayment terrifies you a bit, $916 a month could be a bit too much. You could do it over 10. So you still get the benefit of the good rate. You will pay a little bit more, you will pay more interest by doing that, but you still get the benefit of the lower repayment than getting a personal loan. Well, that's it for today. Just how to make the most of it rather than just, buying whatever you want and paying it off over 30 years is not always the greatest way to do things. Thanks for listening.